Hello guys, welcome back to the channel. This is Fidel. I hope you are doing well, and I hope you had a wonderful weekend. So in this quick video, I would just want to make a quick review on the pound dollar and the euro dollar. I posted a video, I think it was on Saturday, and I talked about pound dollar and euro dollar. If you didn't watch the video, it's right here. The link was posted right here on my Twitter, and this is the video. Okay, this is the video. This is the video where I was reviewing pound dollar and DXY. All right. Um, but hey, come on, guys, you can do better than this. 497 subscribers. You can do better than this, guys. You can. Let's take it to 500, then to 1,000. You can do better than this instead of just watching and without subscribing, but yeah, but anyways, this was the video that I'm talking about. If you watch this video, you will understand that the analysis was about what I was expecting with pound dollar. If I start with pound dollar, we spoke about price taking out these highs. All right, these highs right here. But then I also talked about price being in this mitigation block, of which once price has been taken out, once price has taken out this mitigation block, it becomes a breaker block. A breaker block, a breaker structure is the same thing. A breaker block doesn't have to be a single candle, it can be a structure. And I say that on the weekly time frame, we've had several rejections. You can even see, if I zoom in, there was this candle right here that tried to push down but then retraces all the way back to close above this area. And then this candle, which was last week, tried to push down, then closed above. So for several weeks we haven't had any single candle closing below. So in as much as we don't see any weekly candle closing below, this area is still valid until we see one candle closing below it. Then it will be invalidated, and then it will no longer hold to the upside. Okay, so let me say it again. This structure, we have a low, we have a low, and we have a high. When price breaks structure, there was a lady who was asking about mitigation blocks. It doesn't matter which time frame you see it, on the weekly, on the daily, on the 5 minute, on the 1 hour, 4 hour, it doesn't matter. It's the same thing. Listen, guys, whichever pattern you see repeating itself on the 1 minute, you can utilize the same pattern on the higher time frame, because market is fractal. So whatever pattern you see repeating itself on the higher time frame, you can use it to your advantage on the lower time frame. All right, so if we use mitigation structures, mitigation blocks on the lower time frame, use the same thing on the higher time frame. All right, and that's why even bias is not far from you guys. You're just confusing things. The very small thing that you are using to to make trades on the lower time frame. Check it on the higher time frame. It's the same thing. And then we were expecting, you already know guys, I do not use this expansion. I use the structure where price just came from. So if we use it, we were expecting for sales here. We see one rejection. This next candle went through. This candle came down, rejected. It continued going up, and ever since, you can see there is no single candle that closed below here, because this mitigation blocks becomes breaker blocks or breaker structures. It's the same thing, do not confuse it. And this is advanced, guys. This is advanced, I'm telling you. I'm not trying to show it to show off, but chances that it no, I'm gonna save it for another time. I want to say I'm gonna save it for another time. Let's just focus on what I was about to show you. So, and I also mentioned about this order block, right? In as much as listen to me. Price doesn't have to close to touch it, reject, and continue up. As much as price has not closed below it, it is still valid. So what matters is the high of this candle. I'm talking about the order block, and the low of this candle. This is what matters. This whole area is what matters to me. So in as much as price has not closed below it, it's still within this range of this order block. It is still valid. And then I also talked about this other candle, which is an order block. After price has grabbed the liquidity from the previous day's low, price went up. This last down candle becomes the order block. And I spoke about in that video that we would see price holding on that order block. So we are now on the daily. This is the previous day's candle, the high and the low. Price grabs the liquidity from previous day's low, respected this order block, and if I switch to lower time frame, I'd like to show you something. Previous day's low, London opens, price goes up. We doesn't take out this high. You see, we doesn't take out the high. Actually, we make relatively equal highs. Price comes down here. All right, down here, and my entry was in here. I locked in. Why, this is GU guys. So if my entry was here, this is about 15 pips. I locked in, price retraced, took me out. That is okay. But then I noticed something. As price was disregarding my analysis right here, and we are going bearish, we have a divergence on the EU, because EU from here, it wasn't, it was respecting this this expansion here. If you check this guy was taking out this low, while EU it wasn't. So that is smart. That is smart money technique, or smart money tool, whichever you call it. I just call it divergence because it is, or smart money divergence. Then price came. It took out Asian lows or Asian range. This was the Asian range. It took out, and then on M5, this candle went above the previous candles. This candle came back to retest this order block. This was my entry. I don't have, guys, I don't have to uh to show you exactly, because but you can still find it right here on my, right here. There you go, guys. Here, this was my entry. If you go on M5, you'll see it. That's my entry. Now take note of something. Okay, now before I go, before I continue, there was somebody was asking me um to share what was the reasons of my buys here, since price has taken me out here at break even. Why was I able to re-enter a buy here? Because number one, we have smart money divergence. Pound dollar was taking out this swing low, while euro dollar, it wasn't. You see right here. Then right, this was the Asian range. Price was taking out the Asian range. Why was price taking out the Asian range? Pause the video and then think about it. This was the reason why price came back to take out the Asian range. We didn't see any shift in the structure on the M15. No shift in structure. Can you see that? This swing high, it wasn't taken out. Let's check EU. Can you see it? Can you see it, guys? And that's why price, when we saw a retracement with EU, this swing low was protected because we had already grabbed the liquidity, already broken the structure. So there is, I mean, it could happen, but high chances that price won't be able to take out this swing low. While on the other hand, GU, we had no breaking structure. This move that took out this liquidity, it was still intact. And that's why price came to take out this swing low, but M5 gave us a breaking structure and a re-entry. Actually, there were two entries. The first one was here where I entered, and this was the second entry. The third entry was on this mitigation block. Why is it a mitigation block? We have a breaking structure right here. Price would retrace, and then we find a sell, but price disrespected it. It went up and then retested this mitigation block as a breaker block. Let me repeat it. The breaker block, it doesn't have to be a single candle. It can be a structure like this one. I know some people would start highlighting, this is the breaker block, and then you are taken out again. Then you highlight the second one. Now this is the breaker block. Now I'm telling you, when you're using a mitigation block, it's the whole structure. While we are using the mitigation block, it's the whole structure. Why? Because we have a structure. Why are you looking for a single candle if price has given us a structure? Situations where you don't look for structures, I'll show you. I'll show you. I'll show you structures. I mean, areas where you don't have to look for structures. I'll show you. For example, let's go to M5 again. You see here, while price takes out this liquidity, this is an order block. This is a propulsion block, of which, because they serve the same purpose, I don't differentiate them. They are one and the same thing because they all have one purpose. So price comes back into it, price goes up, we come back into the propulsion order block. I mean the propulsion block. These terms are even hard to pronounce. Then your entry will be there, and then price goes up. Okay. Let me find another example, better example. Let me find a better example. What is EU? Look at this. We have this structure. Price disrespects it. We're expecting to sell. Price goes above it in here, and then when we trace, where did the price replies to? Where did the market replies to? On this candle. Here we are looking for this candle because we don't have a structure. So you have to utilize whatever the market gives you. If it's a structure, do not look for a candle. Use the structure. If you have a candle, use the candle. Don't look for structures. Here, a retracement, price grabs liquidity below this candle, and then we take out the high, the body. Why am I marking this, the closing of the opening of the candle instead of this high? Wait, because the body of this candle closed above the bottom of this candle, right? And then the next candle retraces back into this down candle, and then it was supported to go up. And now when you shift this to the highest price level of this bearish candle, where did the next candle replies to the high of this candle? So what would you be looking for? Structure in here? Unless you're looking for trouble, use whatever the market is giving you. Not even supposed to be, it was supposed to be a short review and then going into much details. And then on the EU, my entry wasn't here. I waited for price to do whatever it has to do here to break structure, of which we did. We broke structure on the retracement into this mitigation block. Look at this. This last candle, price went back into it. We break structure. Where did we come back? Into this last candle. And then price was supported to go up. And this was my entry. And I'll show it to you. There we go. And then somebody tells you that market structure means nothing. The problem with us, I mean, it's our nature, we human beings, that whatever we do not understand, or whatever thing we disagree with, we don't support it, we speak against it. If I don't understand something, then I'm against it. I mean, it's our nature. That's where we are. But it shouldn't be so. When you don't understand something, then you should have an edge, to study it, to know about it, not to fight it, right? And then somebody tells you that's, I mean, the problem with us is that, I'm also including myself, is that when we mention market structure, we just think of this stuff. This is the basics of market structure. This is the basic level, guys. This is the basic level. The basic level. That's the basic level. That's the basic level, right? That's the basic level. And then I'll show you something on Nasdaq. Let me go on the daily. You remember what I told you about this? This is the daily. And I said, remember what I told you at the beginning of this recording? I said, whatever that repeats itself on the lower time frame, it can be utilized on the higher time frame. It can be repeated on the higher time frame. And whatever you see repeating on the higher time frame, it can also be used on the lower time frame. Now, think of it. If this was previous day's high, this is the daily, but just imagine if this was the previous day's high and you're waiting for a reversal. You're waiting for a reversal. You would wait for price to come, break this structure, and then we return in here, right? Right. But then you've seen several times when price goes above previous day's high and doesn't retrace back to give you an entry, it continues to rally all the way up, like what happened a few days back. If I can find that, I don't know if I would find it quickly. Where is that? Where is that? I think, yeah, here on this EU2, this was previous day's high. It's taken. Price never came back. So what's my point? My point is when a swing high or a swing low is taken, a swing high or a swing low is taken that happen to be a pool of liquidity or a draw on liquidity, that area becomes a point of reversal or a point for support, a point to support price to continue going up. For instance, in this case, so I do not expect price to go down until this area has been broken, until I see a down candle on the daily. Don't take me on H1 because this rejection has happened on the daily. So do not tell me, but if you go to H1, you see a break. No, 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 no. This scenario right here has been seen on the daily. Why are you taking me to the H1? So until I see the daily breaking below, I would expect a retest. This is advanced, guys. Let me take you back here. Let me take you to GU. Why do you see this? Look at this. If we switch to weekly, there is nothing. It's just rejections. When you check it on the daily, there are some full candles. So the time frame where you saw the rejection or the break of structure, it is the same time frame that you have to use for your full confirmations. If I saw rejections on the weekly, why would I confirm anything on the daily? I would wait for the weekly to break. When the weekly closes here, then I know, all right, then price is trying to go bearish. I would expect then a retest in here. I don't know if it's making sense, guys, but I hope it's making sense because uh, this stuff that I'm telling you guys, believe me, guys, these are things that now on the pound dollar, yes, do you remember this earlier? Right here, this is the same thing, the same I posted today, and I said if you are in pound dollar buys, take partials here on the horizontal line. The horizontal line, I meant this one. I meant this, not the previous day's high markup. I meant this one right here. And then when we switch to M15, what happened? We saw a retracement. But if you took partials, you are okay. How much pips was in here? 23 pips. 23 pips. So I'm not trying to prove anything to you guys. I'm just trying to share my thought process. I'm trying to share with you how I see the market, how I read the market. It might be a bit different from what you've heard or seen, but I'm just sharing what I know and how I understand stuff. This is a mitigation block. Price disrespects the mitigation block. This is how I would have traded it from this to this high. Where did this candle reject from? From here, where I would have entered my sales. I would have used it for my buys. Market structure is not just seeing highs and lows. No, there are times price won't even retrace. Like, but all right, guys. So I hope you've enjoyed the video, and of course, leave a like, subscribe, share, and oh, I forgot to look DXY. I beg your pardon. Do you remember the analysis I made on DXY? I mean, go watch the video, guys. Go watch the video. This video right here. This video right here. This here. Go watch it. This is what I said. If you watch it, you will see how I did a markup from using my fib technique here. And I said, as long as we are still locked in here, I don't see DXY going. I don't see dollar going up. And actually, if you watch the video, the analysis that ICT posted on his channel, you'll see it's the same thing, the same thing. And I posted this before him, which I'm so excited because it means I'm improving. I'm doing well. So I'm happy. I'm glad. Like I was able to see the same thing that ICT saw because he's our mentors, you know. This is the same thing. So just because we had a push up, somebody was saying no, dollar is gonna buy for today. It could buy tomorrow, but before that, we need to see price breaking from this level, and if it has to go down, we need price to break. I'll show you something. We need to see price breaking below here. Why? Because we have imbalance in here. We have this order block on the daily and on the weekly. Otherwise, if none of that happens, we'll just keep seeing consolidations in here. So I hope you've enjoyed the video, guys. Stay safe and keep your psychology in check, and take care of your health also. Very important, guys. Stay safe.